Your employer just convinced you that a $300 a month insurance deduction is basically a raise, and you thank them for it. This is not an accident. It is a salary negotiation strategy. And HR has a name for it that they will never say out loud to you. Here's how it works. Your employer pays a chunk of your health premium. You pay the rest, pre-tax, straight out of your paycheck. Pre-tax sounds like a win. And technically, yes, you save a few $100s a year on taxes. That part is real. But here is what they do not tell you in the open enrollment meeting. That premium contribution gets counted as part of your total compensation package. So when you sit down for your annual review and ask for a raise, your manager pulls up a number. Total comp salary plus benefits. And that insurance? It's already in there. They say, we cover your health insurance. That's thousands of dollars a year in value. And suddenly your 3% raise request feels greedy. But that's not even the strangest part. Accounting does not call it benefit. They call it a salary reduction strategy. That is the actual term. Because when you accept the benefit instead of the cash, the company's payroll tax bill drops. Your pre-tax premium reduces their FICA contribution too, not just yours. You're saving them money every single month. And they're using that same arrangement to justify not giving you more of the money you earned. Think about the compounding damage here. If your raise was suppressed by even $2,000 a year for 5 years, that is $10,000 gone. And future raises are calculated off that lower base. Every raise you never got is now also compounding against you. Because raises are percentages. A smaller base forever means smaller raises forever. This is why smart negotiators always ask for total compensation broken out line by line. Salary, bonus, equity, and benefits separated. Never let them bundle it. Even elite sports agents get caught in the same trap. An athlete signs a deal with jersey sales and endorsement bonuses baked into the headline number. But payroll taxes on endorsement income hit differently than base salary, and nobody in the room warned them. The headline number is $20 million. The actual deposited number after taxes, agent fees, and benefit offsets? Sometimes closer to 9. The gap lives in the fine print. The mechanic is identical whether you're a warehouse worker or a professional athlete. Someone bundles the numbers in a way that makes you feel compensated, while quietly keeping the difference. So what do you actually do? First, ask your HR department for your total compensation statement broken out line by line. Get that number in writing. Second, when negotiating, say explicitly, I want to discuss base salary, not total comp. Remove the insurance from the conversation and make them defend the number that hits your bank account. Third, go research market salary data on Glassdoor, levels.fyi, or LinkedIn Salary. Know the base rate for your role before you walk into that room. Information is the only leverage you actually have. They built this system to feel like generosity. It was designed in accounting. It was named by HR. And it has been quietly working on your paycheck for years. If this just made you look at your pay stub differently, follow for more of these, and like this video so someone else stops leaving money on the table. And tell me, has your employer ever used benefits to push back on a raise? Drop it below.